go with that one now. Good morning, everybody. It's Dave Finale. This is Real Estate Talk TGIF episode 227. That's right, 227. Just give me one sec. I'm really good with technology, but for some reason I get this all mixed up. There's so many controls on this dashboard. Anyway, here we are with Barbara Schreihans of Your Tax Coach. Barbara, I met you at an event several months ago. Was so freaking impressed, started following you right away. I'm so excited about you had to say, because I was always intrigued many years ago with how to set up your taxes, how to do it, because my dad always taught me you do everything yourself. I mean, we managed property for 40 some years. I did anyway. And, you know, up until about 10 years ago, I still fixed toilets, did all that stuff. So, of course, you got to do your taxes, right? You see, they go together, toilets, taxes, whatever, you know.
Oh, no.
Anyway, so we're going to talk about your story. We're going to talk about how to help real estate agents not pay Uncle Sam or to pay them legally, of course, all legally. And as we do that, we're going to have a lot of fun in doing it. So we'll be right back as we get started. Real estate agents, are you looking to acquire clients consistently to grow your business and income for a great lifestyle? Well, this is Dave Finale, and I'm here to bring you the Real Estate Skill Builder broadcast, Real Estate Talk TGIF, brought to you by Real Estate Skill Builder and the Modern Agent team. Here we go. Hello, everybody. Welcome back. We are on Real Estate Talk TGIF, episode 227. Barbara, I do have one question before we get started, and everybody comes on and I ask them the same question, and it's got to do with the name of the broadcast. It's called Real Estate Talk TGIF. Do you know what TGIF stands for?
Yeah.
Okay, hit me.
Thank God it's Friday.
You are so close. You are so close. It was a trick question, right? It's thank God it's finale.
I knew you were going to say that.
See that? It just happened to have this way, like 224 weeks ago, 5 weeks ago, actually, before I started, I decided to do this because I saw it done really poorly. And I decided to start doing it. And I figured, okay, Friday mornings, I can commit to that. I'm going to be around. You know, Friday morning is great. If I play golf, it's going to be in the afternoon. So, hey, let's call it TGIF. And then I realized, wow, that works. Anyway, good morning. This is Real Estate Talk TGIF episode 227. And we are from Real Estate Skill Builder, Modern Agent team, and of course, njheroesprogram.com. So, Barbara, good morning. You are a tax accountant. Is that correct?
Yeah.
Right. But you're the cool tax accountant, right?
I mean, we actually save people money. So we call ourselves tax strategists because we strategize how to save people money.
Awesome. So, all right. So you've got a really cool story, and I'd like you to tell people how you got into being that tax accountant, that tax strategist. Just, you know, started from wherever you want to start it. I mean, because it's really cool, very, very, very intriguing to a lot of people.
Yeah, so I graduated high school. I was 16, so I graduated early, and I honestly had no idea what I wanted to do. And so I went to community college, and I ended up getting 4 different AA degrees because I had no idea what I wanted to do. I would get one degree, and then I'm like, no, I don't actually want to do that. No, I don't actually want to do that. And finally, my community college was like, you got to leave at some point. Like I was there for 5 years, 16 to 21. And so I just picked business. I got into university. I went to Cal Poly San Luis Obispo, if anyone is familiar with there. It's beautiful. And so when I was at Cal Poly, I majored in business. So my junior year of college, I ended up getting pregnant. And so I went to my career counselor and I was like, oh my gosh, I'm pregnant. Like, I don't know what to do. And I just need a major where 100% chance when I graduate college, I'm going to have a job. And my career counselor was like, well, then you have to go into accounting. And I was like, accounting? Like, that's so boring. And they're like, well, 100% chance you'll have a job. And I actually had an internship with the largest accounting firm in the world after my junior year before senior year. And I kept interning there. I ended up getting my master's in taxation just because I loved it so much. And so I started at, like I mentioned, the most prestigious accounting firm in the world, and quickly realized like we were working hundreds of hours a week for not very much money, and we weren't actually helping our clients. And so I quickly moved to a smaller, like more regional firm. My old manager recruited me there, and I found I kept leaving these places after a year or two because I'm like, they're not actually helping their clients. And then I'm like, they're not actually helping their clients, or their communication sucks, or why can't I help this client with that? Just because, you know, our billable hours got in the way, or oh, the client isn't willing to pay for that. And so after 10 years in public accounting, my husband and I were moving across country because he is still active military. And so we were moving from North Carolina to Arizona, and we were just chatting. And I was really upset because I helped this client save millions in taxes. Literally, one client, I saved them millions.
Wow.
And my old boss, I was like, sweet, I'm going to get a bonus because I just made them the most amount of money they've ever made. And I get this email that says, you get to beat that next year. Not thank you, not nothing. And I'm in the car driving across country, and my husband's like, well, if they were your client, like how much would they have paid you? And like the light went off, you know, and I was like, well, I guess they pay me the same. And he's like, why don't you start your own firm? And I was like, I never thought about it. I don't know why they like indoctrinate you in school, you know, to like climb the corporate ladder, and, you know, you're just expected to maybe one day become a partner in a firm. But that's when we started.
That's pretty awesome. That's an awesome story. So you get into this and you started your own firm. Talk to me about the struggles of starting your own firm, because there's a lot of agents, a lot of teams out there that struggle. They struggle. So people get into this thing about starting their own team. And the biggest problem, Barbara, that they see is they don't see the end game. They see the end game, what they want, but they don't see what's in between: hiring people, support, admin, all that other stuff. And it turns out as they move along, they don't make any money. A lot of team leaders and teams don't make money. They're not profitable, right? It has a lot to do with strategies, right? So when you were going to build your business, where did you start, and how did you progress?
Yeah, I mean, it was just me when I started, and I'm not going to sugarcoat it. Like, it was really hard at first, but I'm one of, like, even my team tells me to like slow down and like stop working so much, but that's just who I am. Like, I am ingrained to work really long hours and really hard, and I'm
Right,
really driven.
right.
And so honestly, it was like working a lot. And I will say, and it's kind of similar for real estate agents. There's a lot of real estate agents out there. There's a lot of accountants out there. And I really just took to social media, and I was like, how can I be different so that people actually follow our page? And I noticed that if I just shared about my day to day, people were nosy. Like, people are inherently nosy. And so literally every single day, there wasn't one day that I didn't have Instagram stories up. And so I would just share like the coffee that I was drinking, and the meetings I had today, and what clients I helped and how I helped them. And people were like, "Oh, I didn't even know that, you know, you could deduct this or that." And so that's really how our social media grew, and that's how we get most of our clients at this point. And so I think really finding like a way to differentiate yourself as an
Right.
agent, and not just like, oh, I sell houses for everybody. It's like, well, you probably want to like focus on a certain group so that they're attracted to you and your message and your mission. I think the other thing besides social media and differentiating yourself is like, why are you doing it? You know, for me and for my team, I make sure that this is one of their core values, is that they want to help business owners save money in taxes. Because if they can save a family money, that family can survive. They can go on a family vacation. Their business will survive. And so finding a reason why they're doing what they're doing.
So let me ask this question. So when you started your business, did you think about why you were doing it? Did you think about, because let's face it, like a lot of people get into real estate business, and it's funny. I saw an older agent do a TikTok the other day. All you have to do is be as a high school graduate. You can set your own hours and you can make a lot of money,
Mhm.
right? And that is the false pretense that a lot of agents get into business with, that they don't understand what it's all about. They think it's just showing houses. So is it, and they think about making a lot of money. That's the last thing. Were you thinking about that? Were you thinking about the why part of it? Or were you thinking about, let me get in there. Let me like really do this. I can get this done. I can make money doing it, or I can help people save a lot of money and not have to deal with the a-holes that are in CPA offices.
Yeah, good question. It was definitely because I wanted to help people save money. And it goes back to like my childhood, really. Like I grew up seeing my mom work really hard at minimum wage jobs, and she would have to give her paycheck to my dad, and my dad would like give her an allowance. And I always saw that. And I was like, I don't want any other families to have to go through kind of those money issues and that money mindset. And so I knew even when I was working for another company, if we saved them money, we could help their business or help their family. And so that's the mindset I went into my business with. But honestly, what really helped, so we started 1/1/2020. Then, as we all know, what happened in 2020, COVID hit. And I really just started telling people on social media, hey, I can help you get PPP loans and EIDL loans, whatever you need to save your business. And that's when I really realized how impactful we could be as a company, because I had someone send me a package a month ago. I mean, COVID, this was almost 3 years ago at this point. Someone sent me a package a month ago saying, thank you, you saved my business. And like, that's the impact that we can have on people.
It's pretty amazing. It's people don't think about their money really. They make it, they think about it as they're making it. And this is really great. You're having fun. And look, to be honest with you, the real estate agent that does well starts getting a couple of checks one after the other. What's the first thing they do? I asked this question at our open Modern Agent Mastermind office hours the other day. And the answer was they buy stuff. Well, specifically, I think in my area, which is the Northeast, I think they buy BMWs. I think that's what they go do, is they get the check and say, okay, I got this $10,000 check. I got another one come in. I can go lease a BMW. And then in a few months, when they didn't pay attention to their business, oh shit, how am I going to make this payment? Right. Yeah. So when we talk about what you did, and you used the word strategy earlier, right? How would you say that a new agent needs to start their strategy?
Oh gosh, I would say first thing is to get their LLC. And that's really a legal strategy. It's not going to save you any money in taxes right then. But getting your LLC, for one, it more legitimizes you as a business. You're not just an agent, a 1099 contractor. You have a business, and you might treat it more like a business when you have your LLC. And getting a business bank account and business credit card so that you're not just commingling when you get those first few checks. You're not, going out and buying whatever on the business card. You really want to separate your expenses, because if you're audited and the IRS can see you're mixing personal and business, they'll disallow all of your business expenses, which is crazy. I think it's crazy, but that's what they do. And so I think getting your LLC, separating business from personal, is like foundationally what everybody needs to do.
So I want to put in here that some states, only the backward states, and one of them happens to be New Jersey, don't know why, does not allow you to get paid unless you get paid yourself as the licensee. They are working on changing that. However, and I'm sure you would agree with me, no matter what, get the LLC, even if you are in the backward state of New Jersey, to be able to take your check and put it in that account after you get it. Because it gives you, as you said, it gives you the psychological advantage that, shit, you are a business. You have to do that. I had someone ask me, talking about strategies and tax strategies as a business owner, and I'm sure you're aware of this book, and the author's been on this broadcast twice, Profit First.
Yep, okay? I've been on the podcast.
Okay, so Mike Michalowicz, really nice man, so intelligent, only lives about 20 minutes from me. And he's been on the broadcast. So I had a co-coach of mine, Sekou Pyle, ask me, he was actually on last week. He asked me to ask you, Are you a profit first coach? Are you a profit first accountant?
We have clients that we do profit first for because that's what they want.
Okay.
However, it only works for certain people.
Okay, great.
I love the concept of it, but I do think it's a lot of accounts to have, and it's a lot to manage if somebody has never managed their stuff before. So I think for some of our more advanced business owners that are really trying to get in the nitty-gritty and really trying to see their profit margins, it's great. But for some people, it just doesn't work. It's going to overwhelm them, and it's going to mess them up even more.
That's a great answer, and I love how you approach that, simply because it is a lot of things to set up. If you're not familiar with the book, it just wants you to set up a lot of different accounts. You're actually going to protect yourself, and it may actually build a little discipline. I don't know. I'm not using it myself, but it's just a question that someone wanted me to ask, and if he didn't ask it, he would have been on later to ask it. So I wanted to make sure I got that out of the way. So when we talk about strategies at the LLC, what's the step after the LLC for agents that are either new or in the business now, for real estate agents?
So we love when we can switch agents from an LLC to an S Corp.
Okay.
And we really recommend that at about $40,000 of profit. There's no hard and fast rule of when to switch to an S Corp. Like, you can be one at any time. I'll make that clear. But we don't really like to switch people until about the 40K profit because, and here's the tax savings, the advantage of switching from LLC to S Corp. When you're an LLC or even just a sole proprietor, which a lot of agents are, you're paying the highest amount in taxes. You're paying federal, state, but the silent killer is self-employment tax, which
Right.
is another 15.3%. So if you're making $100,000, you're paying another $15,000 just in self-employment tax, not including federal or state. So it's crazy. But when you switch over to an S Corp, you can get out of most of that 15.3%. So there's a huge tax savings. But the IRS isn't just going to let you get that tax savings without more rules, right? So you will have to have another tax return that you have to pay someone to prepare.
Right.
You have to be on payroll, which you'll then have to pay like a subscription service monthly to run your payroll. And so at 40,000 is really where like the cost benefit analysis makes sense, because you're saving about 6,000 in taxes, and you'll probably pay about 3,000 in other fees because you have to pay a tax return, payroll, all that.
Right. Okay. So it's actually a big deal to go from LLC to an S corp, which makes an awful lot of sense. And one of the things, is it true that the income on an S corp actually flows through to your personal tax return? Is that right?
Yep. Yeah. So say you make $100,000 in your S corp and you paid yourself $30,000 on payroll. What you'll see on your personal tax return, you're going to have your W-2 from your payroll. So that 30,000 is going to be on your personal return.
Right.
And you'll probably have 70,000 flow through from your S corp, because that's 100 minus 30.
Right.
So both those numbers flow through to your personal return. And so you still pay taxes personally, not your business, but you don't have to pay the self-employment tax.
That's amazing. That's really cool. So talk to me about the different strategies as real estate agents start making more money, what they should be doing with their money and how they should be watching it. Is it just a matter of putting it in a bank account, or or spending it, or how do they build their business? Like there's a lot of different strategies that you talk about on your website, which is yourtaxcoach.biz, by the way, everybody. Talk to me a little bit about some of the strategies from simple to complex.
Sure. So tax strategies, not in terms of growing their business.
You talk about tax strategies first, then we're going to go to growing your business.
Okay. So some tax strategies. So once you're an S corp, and by the way, if you're not a real estate agent, being an S corp might not make sense, but for most agents, it makes sense. And so once you're an S corp, then it would be things like, we call it writing off your life. I have that trademark. I'm so proud of that trademark. But
I would be, are you?
And so writing off your life, and that really means taking most things that you're using in your daily life and how can you make it a business expense? Because the more that you can write off in your business, the less money you're going to pay in taxes. And so it's really thinking about, okay, I'm going to this meal, this dinner. How can I make it a business expense? Well, can that person ever be a client? As a real estate agent, sure, anyone could be a client someday. So that's a prospect meeting that you're having. So that's a business expense. Are you having dinner with another agent? Well, that's a networking meeting. Are you meeting with a property manager? That could be a marketing meeting because that property manager could one day send you a client. Even if you're meeting with like family or friends, like just because they're family or friends does not mean they're not a prospect, you know? So really keeping like the receipts for it, documenting it, writing on the receipt, like prospect meeting or whatever it might be on there. Cause you're not going to remember if you're audited in 3 years, why you had that meeting or who was there. So write it on your receipt. But so just meals is an example, but travel, everyone loves to when we talk about travel. So really, I always say, like, don't say you're going on vacation. You're going on a business trip. And how can we make it a business trip? So again, those same topics. Are you going out and finding prospects? Are you networking? Are you researching a different market? Maybe you live in Philly, but you want to go research New Jersey, something like that. So really making travel a business expense. Or you want to buy really nice clothing or a new handbag or something, put it in a photo shoot. That's a photo prop. You had to have that bag for your photo shoot. And so there's just so many ways. I could go on and on.
Okay, so let me give you let me give you one example. Okay. Someone renovates their laundry room in their house. They take before and after pictures and put it up on social to show you what a before and after renovation could look like. Will it bring you money? Is that deductible?
No. It can be if you do certain things, but just in that aspect, no, because the IRS does not like, they call it mixed use areas.
Okay.
And so your laundry room is a mixed use. Even though you put it on social media, you're going to use it personally to do your laundry. Same with like kitchens. A lot of our like fitness or nutrition clients, they're like, well, I can write off my kitchen because I'm like posting meals and recipes. No, doesn't work. But if you post affiliate links, like maybe you bought a new washer and a new dryer and new cabinets. So you link it to either like to know it, or you link it on Amazon so that when people click it, you get paid a percentage, then that can be a business expense. So the affiliate fee part of it.
So talk to me about savings that agents can get having to do with their own personal residence.
Yeah, there's a few. So every agent should be taking a home office deduction if they work anywhere from home, which probably 99.9%
Right.
do. They're always on their phone, probably like on their couch at night, you know, responding to clients. But if you have a designated space in your house, you can take home office deductions. Now, and people still ask me, is a home office deduction red flag? No, it's not. It was red flag in the 90s when people didn't actually work from home. Now everybody works from home, so it's fine. But I'll say with home office deductions, if you use like those online softwares to file your taxes, they're only going to max you out at $1,500 a year. But if you use a different method, like most accountants will use, it's called the actual method for home office deductions, but you can easily get 10,000 plus a year in deductions. So basically what it does is it takes the percentage of your home office to the percentage of your house, and we can take like mortgage interest, insurance, property tax, your rent if you rent, utilities, if you have a landscaper, a cleaning person, a pool person, anything related to your house, you can take a percentage of. So that's home office. There's also something called the Augusta rule. Have you heard of that?
No, I haven't. Tell me about the Augusta rule.
So it started in Augusta, Georgia for the Masters golf tournament back in the 70s.
Yep.
Before Airbnb was around, obviously. But in the 70s, the Masters golf tournament would come to town. All the hotels would sell out. And so people started renting their house out to people that would come for the tournament. And they would charge like $10,000 a night. And they had really good lobbyists that got a law passed that says if you rent your house out for 14 days or less per year, then all of that income is tax-free. Fast forward to today, the rule is still around. A lot of people use it for like the Super Bowl. They'll rent their house out when the Super Bowl comes, but you can do it as a business owner. You can rent, as personally, you can rent your personal house to your business for 14 days or less per year. And all of that income that you take out of your business is tax-free. And you can literally get hundreds of thousands of dollars out of your business. Don't just try it like yourself. You need paperwork to do this deduction, but it's a really cool way to get a lot of money out tax-free.
I love that. I love that. So what we've done here, guys, in the last 10 minutes or so is we've given you some ideas and strategies for you to be able to save money on your taxes. And I wanted to get you to start thinking about it because let's face it, when we look at October, where this is being broadcast, October 14th, 2022, this is the time where you should be, if you're not, close to finishing up your business plan for 2023, the next year, right? And what needs to come into play there is your business finances, which is also going to say your personal finances as well. So what we've done this week in my group is we've talked about personal finances and how important that is to understand what it costs you to live the life you live, right? Whatever anything is, you need to understand your personal finances. And can stop me anytime you want, Barbara. But that's first. And then you need to decide how much money you want to make, how much money you need to make to pay for that. And then we go, okay, so how much money do we want to make? How aggressive do we want to be with our business? Where do we want to go in the 12 months coming up? So that business plan is extremely important. Personal expenses, how much you need for it, and then what kind of life do you want to live? And then you can go crazy with it. So from that, let's segue into business growth. Talk to me about where your tax coach is going to help real estate agents and entrepreneurs alike grow their businesses.
Well, really, I like to say we're people's like money therapists because they come to us for anything and everything related to money,
Right.
even though we're just tax accountants, but we're not. We can help people with any of their money issues. And so in terms of growth, it's really like knowing your numbers as well. Like you kind of alluded to for personal, you have to know your numbers for business, because how can you make a decision in your business if you have no idea how much money you've brought in, if you have no idea what your profit margins are? Okay, it's cool you have some transactions coming in. Maybe you have 20 grand coming in, but what's your profit on that? And what do you get to keep from that?
Right.
And how much do you need to save so you have the right runway until your next transaction? And so you have to know your numbers first. And so that's why we have an amazing team of bookkeepers as well, because they will help you figure out your profit percentage, your normal operating expenses for the month. How much should you be investing into coaches and masterminds and conferences and those types of things to actually keep growing your business so that you don't just tank and now you're left in this, well, when am I going to get my next check? So that's the first thing we do, is really like nailing down people's numbers.
Right. So when we talk about nailing down people's numbers and them to grow, you mentioned actually how they should spend their money based on the growth that they want to have. And it's no secret that the real estate market it's a little different today than it was a year ago. And there are people out there, and people out there are saying, okay, what can I cut? What can I cut? I've got to cut this out. I got to cut that out. And a lot of people are kind of like cutting off to cut off, right? And I like the old expression, you cut off the nose despite your face, right?
Yeah.
And you're cutting just to save money. Where should you cut, but where should you be continuing to invest in the markets that we're in today?
I honestly think it's just the wrong mindset if you're just trying to cut, right? You should rather be thinking, how can I make more money? So when I talk about debt, I talk about this because when I graduated school, I was over $100,000 in debt between my student loans and credit cards and all the things. Like I had to put daycare on credit cards when I was in college. And so it took me a long time to get out of debt. But what really helped was not putting myself on a budget, a super strict, what can I cut budget? It was more of how can I make more money so I can pay these things off faster?
Right.
So it was like getting that side hustle, or whatever. So if you're an agent trying to just cut, that's probably, I mean, if you're into the woo-woo stuff, you're one, telling the universe that you don't want more money because you're just being too frugal. So you need to be more in flow with your money. But also, it kind of restricts you from like creative thinking on how you can make more money. So if you're an agent, why don't you partner with other agents that are doing really well and show for them, or be their assistant, or start working for a property management company, or maybe you can market to different people or go back to the people you've already bought or sold to and see what transactions they're looking for. So it's like, rather than just cutting all the expenses, go out and like build your business in a different way.
So in other words, don't wimp out, figure it out.
Yeah, sure.
I love that. I mean, one of the things that you did, and it's something, the advice I give to a lot of people. And my daughter just got married, had a baby, and one of the things I talk about with her and her husband and my friends in the same boat is, things might seem tough as we go along, but you did it, I did it, we figured it out. We figure it out as we go along. And it's just being, being a little nimble in your feet, and don't let your feet get stuck in concrete, so to speak. So you also talked about, should you be getting coaching? Should you be spending money on that? So where, aside from, keeping your business going, are there places they should be spending their money or they should not be spending their money when we're talking about a different market like as we are in today?
So coaching is interesting because I love it. We spend a ton of money on coaching and masterminds and groups, not only for the growth, but also like that's how we also get clients too. So it's hard to say like, don't spend money on coaching, because there's also this like leap of faith with it too. You might not have
Right.
the money for this big expensive coach, but what it will do is keep you accountable and grow your business if you follow what they're telling you to do.
Absolutely.
But also, don't just believe everything you read online, right? There's a lot of shitty coaches out there, unfortunately. So, like, follow that person for a while, have meetings with them, make sure they're aligned with what you're really looking for. But there's still plenty of amazing, amazing coaches that will help grow your business. So, we tell people like 15% of what you're bringing in should probably be back into your business, because it's not the 15% expense that it's costing you. It's how much are you making from that? You could double your business. You could triple your business. So then it's not costing you anything.
So everybody talks about those great letters, ROI. Well, what's the ROI of that? What's the ROI of a postcard? What's the ROI of a coach? Oh, lost you for a sec. You there? Hold on. You there?
Hello?
Yeah, lost you for a minute.
Sorry, your ROI on a coach.
Yeah, people talk about ROI, and everybody, all the people that like to have a good opinion of themselves, high opinion of themselves, want to talk about, well, what's the return on that investment? What's the return on that investment? Is there something you're looking for when a return on investment? If you don't do the work, you're not going to have a return, right?
Exactly. And how do you quantify, maybe your sales didn't go up, but you learned a new marketing strategy that you can use in the future, or you up-leveled your mindset, or you're a better husband now, or a better wife, or a better mom. Like, you can't really calculate the ROI on that kind of stuff.
No, you can't. I mean, some things take an awful long time. Like, for instance, people want to do marketing, right? They want to send out postcards. Postcards are a really good thing. If you're sending it to a small amount of people, if you're not following up with those people with a phone call or a door knock, shame on you. Just throw your money away. Better yet, mail it to me. I'll take it, right? I'll take it, because I'll get you just as much business as that postcard will. If you're mailing it to a mass area, you need to do something to support that, either on social or in person at an event in the area that you're in. So just to give you an idea that there is an ROI on everything, you just need to know how to qualify it, quantify it, monetize it, right? So,
Yeah.
all right. So I do research on my guests from all the time, and I want to go through. I got a couple of questions from your website.
Okay.
So you actually alluded to this earlier. Fairy tax mothers.
Oh,
Love it.
Yeah, we actually got that from our client. They were messaging us and they're like, you guys are like the fairy tax mothers. And I thought that was cute.
So tell me, what you did for that client and how you helped them. I mean,
Yeah, they were a strategy client, and so we really helped them save money in the current year in their taxes. I think we ended up saving that person like $80,000 in taxes. But the cool part that a lot of people don't know about is you can actually go back and amend 3 years of tax returns. And so when you're a strategy client, we'll also go back and amend 3 years. And so for that client, we got them back 40,000, 30,000, and 45,000 for those
oh,
other three
good.
years. And so they're getting huge checks in the mail as well. And so again, it's that kind of it doesn't cost you. We don't cost you anything if we're just making you money, right?
So there's got to be a return on the investment for your tax coach. Is that right?
Yeah, I mean, we always tell people like we don't cost anyone anything. Not a single one of our clients has not saved more than our fees. And we make sure of that before we even take them on as a client. So it's an easy yes.
What would you say? What would you say to the person that says, "I'll do my own taxes"?
Oh, it's not even just the tax savings that you'll get, but it's the liability that you can have if you do something incorrect and the IRS comes back later. And like we see it all the time. People try to prepare their taxes. One, you're leaving so much money on the table that you could use that money to invest back in your business or into coaches to grow your business even more, right? Or you take your family to Disney World or buy a new car or whatever it might be. It's really the liability that gets me on doing your own taxes.
Okay, I get that. Okay, so we talked about Fairy Tax Mother. So one of the things on your site is 5 ways to save on your taxes. All right. So talk to me about in that the 5 on how many ways. Just quickly rattle off a couple of ways to save on taxes.
Yep, your home office deductions, which we already kind of chatted about. That's a huge one. Vehicle expenses, especially for real estate agents. So a lot of agents just take mileage, I think, because that's the easy thing to do. And a lot of people have heard of, oh, just write off your miles. But you can write off, hi, Carl. You can write off actual expenses of your vehicle too. So this would be like if you bought a $50,000 car or that BMW you're talking about,
Right.
you can take $50,000 as a business expense, as well as your gas, which was really expensive this year.
Yep.
Your gas, repairs, insurance. You want to get your car lifted or crazy rims or whatever you want on your car, the cost to get it detailed and washed. So your actual expenses is usually a lot higher than your mileage. And so I always urge people to be like, check out your actual expenses, not just your miles, because you're probably leaving a lot of money on the table there too. So home office, vehicles. If agents have kids, they should be paying their kids in their business. And that's a big way to get tax-free money out of your business as well. And it's easy for agents because the next question is, how do I, like, what are my kids doing in my business? What's their job?
Right.
Well, if they're little, like babies, you're probably posting their cute pictures on social media. So you need to pay them as a model in your business. Or they're a little bit older. We have 6, 7-year-olds that are stuffing envelopes, like you're mentioning, like for postcards or handing out flyers, or they're going to showings and handing out flyers. And or even a little bit older, 10, 12-year-olds that are managing social media. They're engaging on social media, writing comments back and forth, trying to find ideal clients. They're researching markets or listings on Zillow or the MLS or whatever it might be. And so there's like a whole gamut of reasons you can employ your kids. And the tax benefit is you can get $12,950 per kid out of your business completely tax-free. The money goes to your kiddos, but you're their guardian, so it's really just your money. You can use it however you'd like.
So is it a W-2 kind of an employee?
Yes, you do not want to pay them as a 1099 because then they have to pay self-employment tax.
Right. So you pay them as a W-2. You have those taxes involved. Is that correct?
Nope, not if you set it up correctly.
Wow.
Yeah, they're exempt from taxes.
Wow. I got that's huge. It's funny. I was talking to my daughter who just had a baby. I'm saying, I'll tell you what, I'll use little Logan as my model and, put him up there and we'll put him on the payroll. Why not?
So a really cool thing with that, because I'm really big on generational wealth. Like building a legacy for your kids or grandkids or whatever. But if you are going to pay your grandkid on payroll, they're going to get a W-2, right?
Right.
Well, since they have a W-2, what can they now invest in? A Roth. So if you maxed out his Roth for 5 years, so $6,000 times 5 years, that's $30,000, which maybe you were going to contribute to their college anyways, but that $30,000 at retirement would equal $2.1 million. Can you imagine leaving your grandkids $2 million just because you had an extra $6,000 a year? Like, that is one of my favorite strategies.
Okay, so I know you and I'll be working together very soon. Very good. So you know what? It's funny. I mean, I got to say that you just blew my mind a little bit with that because I didn't think ahead, right? I didn't think ahead. Now you kind of disappointed me with the laundry room thing, but
but you could use the Augusta rule instead of writing off your laundry room.
I'm going to use the Augusta rule. Absolutely.
Yeah.
I actually absolutely am. Because I do a lot of video, so I can do a lot of video in my house. I do video everywhere in my house, even in my garage. So, I mean, I'm using it, right?
Yeah. Yeah. So we'll chat about how to max that out.
So, okay. So you just mentioned like some really, really cool words, generational wealth, right? So tell me what that means to you, what you've done for yourself, and what you suppose you others should be doing.
Yeah. So why are we like working so hard in our businesses if we can't then enjoy it later, and our kids can't enjoy it later, and their kids, right? So it's really setting yourself up now and kind of, I don't like the word sacrifice, but just allocating funds in a different way so that you can benefit from it later. Like you're mentioning, the agents that start getting their checks, they're like, sweet, I can buy a BMW. It's like, no, hold on. Let's make sure our retirements are set up correctly. How much passive income do you have? Like all of that first. You know, get financially sound first. I always joke with people, like, I didn't have AirPods until I had 10 rentals, like, because I wanted passive income. And there's so many people that just want the new like AirPods or the new iPhone or whatever. But anyways, I digress. So it's really like setting up your business, one, so you can sell. And yes, you can sell your business as an agent. I have a referral that literally sells agents' businesses, but selling your business so that you can retire, using that retirement funds to then make it so that it lasts beyond your life. And so it goes to your kids or your grandkids. And that also probably includes setting up trusts. Everyone should have a trust, not just for like tax savings. You see all these like marketing scams for like set up a trust and you never pay taxes again. Not true. But what you should have a trust for is so that your money is protected. And there are certain ways that your kids or grandkids can spend it so that it doesn't just get blown on cocaine later on. You know what I mean?
Yes, I do.
So yeah, just setting up so that you have a
funny.
longer runway.
That was funny. Okay. Oh boy. Now you got a lot of stuff going through my head. All right.
I distracted you with cocaine.
What's that?
I said I distracted you with the cocaine.
I don't know why. Remember, I grew up in the 70s and 80s, so you know, it is what it is. Anyway, all right. So how does one we talked about I lost you. You blew my mind there for a minute. So generational wealth, right? So there's your real estate business. There's investing in real estate. Is there one better investment than another?
Oh gosh. No, I don't think so. But I think it's knowing like why you're investing in that thing and what's like the plan with it. What I do love about investing in real estate though is like the whole buy, borrow, die method, right? So you buy a rental. Your rental, say you bought it for 100,000, it goes up to 200,000 eventually. So you take out 100,000 of equity, you go buy another one. It costs you nothing, right? You're just pulling out. I mean, it costs you a little bit on interest. Who cares? interest, debt. There's good debt and bad debt, or whatever you might look at it. Anyways, you pull out the money, you can buy another rental. And you keep doing that until you pass away. That same $100,000 house, maybe when you pass away, Dave, it's worth $1 million. Your grandkids can get that property for $1 million, sell it that same day, and pay zero in taxes because it's contributed to them at the fair market value on the day you died, not what you paid for it. And so a ton of clients come to us and they're like, hey, my parents are going to give me this rental, or my parents are going to, they're tired of dealing with it, so they're just going to give it over to me. No, don't do that, because you have to pay taxes on it, because they're essentially selling the property. Just have them keep it till they die and give it to you when they die. You can manage it for them and they'll pay you a management fee, whatever, but just don't contribute it to you until they pass away, and then it's tax-free. So I love
that's really amazing. Just as an aside, Mike Anderson, there's great information, and I'm not going to put it on the screen, but then he says, when we're talking about that other thing, he says, as he rubs his nose. So thank you, Mike. But anyway, this is such great information, and I wish we could keep going, but we're up against a little bit of time now. So, I mean, I've got your stuff scrolling on the bottom here, and this has been cool. I'm going to ask you if you will do us a great solid and come back again in the beginning of the year to talk more about what's going on. Would you do that for us?
Yeah, of course.
Great. So you've gone through so many strategies, so much advice. Is this the best way to reach you with the information I have on the bottom of the screen here?
Yeah, I would say send an email or DM us on Instagram, Your Tax Coach. Your Tax Coach. I'm always in the DMs. And so if you send a quick message there, maybe I sparked a question that you might have, or you're just like, hey, can you see how much we can save you? We always look at people's taxes for free, and we'll just tell you how much we can save you.
And here's the interesting thing is you are all over the place. You travel all over the place. So if you're at a real estate conference or at some kind of conference, there's a good chance this wonderful young lady is going to be there. Yeah. So you need to go up to her, talk to her, ask her questions, go to her sessions. You really need to get involved. What's the next place you're going to be? Just in case I'm right.
I'll be at the Home Stager event in Dallas. There's like 500 real estate agents and home stagers at that one. I am doing Investor Fuel.
Okay.
In February. I'm trying to think of other real estate. I'm speaking in Dallas next month. Anyone can go to that. That's for all different. That's called Apex Live. So if anyone's
heard of Apex Live, is that with Ryan?
Yep. So I'm speaking at Apex Live November 3rd or 4th. Oh, Flourish is a big one. That's November 3rd. It's in Arizona. It's an all-female real estate event. So sorry, Dave, you can't go. But it's like 200 or 300 female real estate agents, and Flourish is in Scottsdale, November 3rd.
That's awesome. So guys, yourtaxcoach.biz is the website. It's great information. It's where I started doing my research to have my conversation today. Phone number's there, email's there, and at Instagram is there. As you can see, it's been on the screen the whole day. I just have two more things for you, Barbara, if it's okay. I'll take a couple more minutes of your time. Number one, and most importantly, this is the most important question I ask everybody, and everybody gets the same question at the end of a broadcast. What can I do? How can I help you grow your business?
I would say if you come in contact with an agent that's making over $40,000, I'd love to chat with them. So that way they can see how much they can be saving in taxes. So then they can pay for your fees, That's
right. Exactly. Right. So that's what we need. So anyway, and lastly, look, we spoke out in Dallas, where I saw you speak. And I think I had given someone a hat when I was there, and you saw it and you said, do I get one of those too? I said, yeah. You get a hat when you come on the broadcast, and this will be coming out to you. Thank you so much. Thank you so much, Barbara, for being on the broadcast. Everybody, we got another great show for you next week. We'll be putting that out online on Monday and Tuesday. Thanks so much for watching. This has been Real Estate Talk TGIF episode 227. And Barbara, you just stay with us for a minute. We're going to be right back. Barbara and I are not going to be right back. We're just going to see you next week. That's when we're going to be right back. Can't wait to see you all. Barbara, I'll see you in a second. Thank you, everybody.